Listen, I need to have a very serious conversation with you right now. In my 40 years in banking, from the trading floors of JP Morgan to managing institutional portfolios worth billions of dollars, I have learned one thing that separates the wealthy from everyone else. The wealthy watch what the powerful do with their money, not what they say with their mouths. And right now, there is a group of people in Washington, D.C., who are making stock purchases that should have every single one of you paying attention. I am talking about members of the United States Congress. These are the people who sit on committees that regulate entire industries. They attend private briefings on national security, on economic policy, on technology standards. And then, perfectly legally, they walk into the market and buy stocks. Since the Stock Act was passed back in 2012, they are required to disclose those transactions within 45 days. And when you study those filings, patterns emerge that would make any portfolio manager sit up straight. Now, I am not here to debate whether Congress should be allowed to trade stocks. Over 86% of Americans from both parties say they want a ban. That is a separate conversation. What I am here to tell you today is that the data is publicly available. The filings are real. And if you are not tracking what these lawmakers are buying, you are leaving money on the table. So today, on Invest with Marcus, I am going to walk you through 5 specific stocks that members of Congress have been accumulating aggressively in their most recent filings. These are not random picks. These are names where multiple lawmakers from both sides of the aisle are putting real capital to work. And I am going to break down exactly why each one makes sense from a fundamental institutional perspective. Stick with me until the end, because the last stock on this list is the one that surprised me the most, and it is a name most retail investors have completely overlooked. Before we go further, do me a favor. Subscribe to Invest with Marcus right now and turn on that notification bell. The kind of institutional-grade analysis I bring to this channel is the same quality work that costs hedge funds hundreds of thousands of dollars a year. You are getting it for free. So subscribe, hit that bell, and drop a comment below telling me whether you track congressional trades or not. Let us build this community together. Now, let me give you the big picture before we dive into the individual names. In 2025 alone, members of Congress made over 13,000 individual stock trades, totaling more than $635 million. That is not a typo. $635 million flowing through congressional trading accounts in a single year. The most active traders include names from both parties, and the most traded stocks are concentrated in sectors where government policy has the most direct impact: technology, energy, defense, and healthcare. When you have been in this business as long as I have, you learn to follow the money, not the headlines. And the money from Capitol Hill is telling a very clear story about where the smart capital sees opportunity in 2026. Let me start with the first stock, and this one should not surprise anyone who has been paying attention. Alphabet, ticker symbol Google. This is the most purchased stock by members of Congress over the past 12 months, with 178 separate purchase transactions totaling over $2.6 million in disclosed value. Multiple lawmakers across both parties have been loading up on this name. Congressman Cleo Fields alone has made repeated 6-figure purchases of Alphabet in January and February of this year. The Pelosi portfolio exercised 50 call options to acquire 5,000 shares back in January, and then immediately purchased another 20 long-dated call options expiring in January 2027. When you see that kind of options activity from the most tracked congressional portfolio in America, you pay attention. But forget the politics for a moment. Let me tell you why this trade makes sense on the fundamentals. Alphabet sits at the center of the entire artificial intelligence revolution. They control the world's largest search engine. They own YouTube, which is the dominant video platform globally. Their cloud division, Google Cloud, is growing at over 25% annually and is becoming a major player in enterprise AI. And they have DeepMind, one of the most advanced AI research labs on the planet. The company is generating well over $80 billion in annual free cash flow. They are sitting on more than $100 billion in cash. And they are buying back shares at a pace that would make most corporate treasurers jealous. When I was managing institutional portfolios, Alphabet was exactly the kind of name we wanted to own for the long term. Massive cash generation, dominant market position, and a growth runway that extends for at least the next decade. The risk here is regulatory. Antitrust action from the Department of Justice remains a cloud over the stock. But congressional buyers do not seem concerned about that risk, and given their proximity to the regulatory process, that is a signal worth noting. Now, the second stock is NVIDIA, ticker symbol NVDA. This is another one of the most actively traded names in congressional portfolios, with 185 purchase transactions and over $6.3 million in disclosed buying over the past year. 23 separate members of Congress have purchased NVIDIA shares. That is not one or two lawmakers making a bet. That is nearly 24 elected officials independently arriving at the same conclusion. Pelosi's portfolio added NVIDIA shares through direct purchases and long-dated call options in her most recent filing. From a fundamental perspective, NVIDIA remains the undisputed leader in AI accelerator chips. Their data center revenue has been growing at triple-digit rates. Every major hyperscaler on the planet, Microsoft, Amazon, Google, Meta, is spending hundreds of billions of dollars on AI infrastructure, and the lion's share of that spending flows directly to NVIDIA. Now, I need to give you some straight talk here. NVIDIA is a $4.6 trillion company. At these levels, the law of large numbers starts to work against you. The stock is not going to give you the same percentage returns it delivered in 2023 and 2024. That is just math. But what congressional buyers are telling you is that the AI infrastructure build-out is far from over. The earnings power of this company continues to expand. And while the easy money has been made, there is still significant upside for patient investors who understand the multi-year nature of this capital cycle. If you are looking for a 10x return, NVIDIA is probably not your play. But as a core portfolio, holding in a world being reshaped by artificial intelligence, it remains a Tier 1 asset. The third stock is where things start to get really interesting. We are talking about Vistra Corporation, ticker symbol VST. This is a name that most retail investors have never heard of, but it has become one of the most compelling plays at the intersection of energy and artificial intelligence. Pelosi's portfolio exercised call options in Vistra back in January, converting those options into 5,000 shares of common stock. When somebody exercises options instead of simply selling them for profit, they are making a deliberate decision to own the underlying shares. That tells you something about conviction. So what does Vistra actually do? They are one of the largest competitive power producers in the United States. They operate a diversified fleet of natural gas, nuclear, solar, and battery storage facilities with a combined capacity of roughly 41,000 megawatts. And here is the critical connection that most people are missing. AI data centers are the most power-hungry facilities on the planet. They operate 24 hours a day, 365 days a year, and they need reliable baseload power that does not fluctuate. Solar panels do not work at night. Wind turbines do not spin without wind. But nuclear plants and natural gas facilities, they run constantly. Vistra owns nuclear plants in multiple states and recently signed a 20-year power purchase agreement with Meta Platforms to supply over 2,600 megawatts of nuclear energy to support Meta's data center operations. The company reported full-year 2025 adjusted EBITDA of nearly $5.9 billion. Management is guiding for $6.8 to $7.6 billion in EBITDA for 2026. Free cash flow came in at $3.6 billion, and over 80% of Wall Street analysts rate the stock a buy or strong buy. Now here is the risk. Vistra has already had a massive run, up over 300% since the start of 2024. The stock trades at a premium valuation compared to traditional utilities, and regulatory uncertainty around data center co-location arrangements could introduce volatility. But the thesis here is structural, not speculative. AI power demand is not a trend that is going away. It is accelerating. And Vistra is positioned to be one of the primary beneficiaries of that demand curve for years to come. In my 4 decades of managing money, when I see a company with this kind of cash flow, this kind of contract visibility, and this kind of government support, I call that a compounding machine. The 4th stock on our list is Tempus AI, ticker symbol TEM. This is the one that caught my eye because it shows congressional buyers are not just playing the obvious AI infrastructure names. They are looking deeper into how artificial intelligence is going to transform specific industries. Pelosi's portfolio exercised call options on Tempus AI in January, taking delivery of 5,000 shares. For those who do not follow healthcare technology closely, Tempus is a precision medicine company that uses AI and massive genomic datasets to help doctors make better treatment decisions, primarily in oncology. The numbers here are impressive. Full year 2025 revenue came in at $1.27 billion, representing 83% year-over-year growth. The company is guiding for approximately $1.59 billion in revenue for 2026. They recently signed a multi-year strategic collaboration with Merck to accelerate AI-driven drug discovery. Their net revenue retention rate is 126%, meaning existing customers are spending more every year. And they closed 2025 with over $1.1 billion in total remaining contract value. Now here is the straight talk. Tempus is still losing money. The company reported a net loss for the year, and while those losses are narrowing, this is not yet a profitable business. The stock trades at a premium valuation based on growth expectations. And there is a class action lawsuit that investors should be aware of. But what congressional buyers see in Tempus is the convergence of AI and healthcare, which many institutional investors consider the largest addressable market for artificial intelligence outside of big tech. When you combine real revenue, triple-digit growth rates, partnerships with pharmaceutical giants like Merck, and the Pelosi stamp of approval, you have a name that deserves to be on your research watch list at minimum. And now, the 5th and final stock, and this is the one that surprised me the most. Eaton Corporation, ticker symbol ETN. Senator John Hickenlooper disclosed a purchase of between $50,000 and $100,000 in Eaton shares back in January. And he is not the only lawmaker buying. Multiple House members have also been accumulating Eaton shares in recent months. Why Eaton? Because this is one of the most perfectly positioned companies in America right now, and almost nobody is talking about it. Eaton is a power management company. They design and manufacture the electrical systems, the distribution equipment, the circuit protection, and the power conditioning technology that every data center, every factory, and every piece of critical infrastructure needs to operate safely. Think of them as the central nervous system of the electrical grid. As AI data centers proliferate and electrical demand surges across the country, somebody has to build and supply the power infrastructure. That somebody is Eaton. The company reported 13% revenue growth in the most recent quarter with a 25% return on equity. They have an 11-year construction backlog in their U.S. electrical business. Their order backlog in the electrical segment is up 29%, and management is guiding for earnings per share of $13 to $13.50 for 2026. This is a $145 billion company with pristine fundamentals, a diversified business model spanning electrical, aerospace, and vehicle segments, and direct exposure to the most powerful secular growth trend in the global economy right now, which is electrification. The risk with Eaton is valuation. The stock trades at roughly 36 times earnings, which is a premium for an industrial company. Revenue came in slightly below estimates in the most recent quarter, and the stock sold off about 4% on the earnings report. But when I look at the macro tailwinds behind this business, the trillions of dollars being poured into data center construction, into grid modernization, into reshoring of American manufacturing, I see a company whose earnings power is being underestimated by the market. At JP Morgan, we used to call this type of stock a quiet compounder. It does not make headlines, it does not have the flash of a high-flying AI name, but it prints cash, it grows steadily, and it rewards patient capital over time. The fact that senators are buying this name tells me they see the same multi-year capital cycle that institutional portfolio managers see. Now, before I let you go, I need to give you the warning that I always give. And if you have watched this channel for any amount of time, you know this is coming. Do not treat congressional trades as a buy signal on their own. These disclosures come with a 45-day delay. The price may have moved significantly between when the lawmaker bought and when you see the filing. Some of these purchases could be part of automated investment plans, and congressional investors do not always get it right. They have losers too. What matters is the pattern. When you see multiple lawmakers from both parties, across different committees, converging on the same sectors and the same stocks, that pattern is telling you something about where the informed capital sees opportunity. Use it as a starting point for your own research, not as the final word. Here is the pattern I see forming right now. The smart money in Washington is positioning for three massive themes: AI infrastructure, including the chips, the power, and the electrical systems required to build it out. Healthcare AI, where machine learning and genomic data are beginning to transform how we diagnose and treat disease. And the broader electrification of the American economy, from data centers to manufacturing plants to the energy grid itself. These are not speculative bets. These are multi-year, multi-trillion-dollar investment cycles. And the stocks we covered today, Alphabet, Nvidia, Vistra, Tempus AI, and Eaton, each represent a different way to capture value from those cycles. This is Marcus, and that is the kind of institutional grade analysis you get every week on Invest with Marcus. If this video opened your eyes to opportunities you were not seeing before, do me 3 favors. First, smash that like button right now. Second, subscribe to this channel and turn on notifications so you never miss a video. And third, drop a comment below and tell me which of these 5 stocks you find most compelling and whether you plan to do more research on any of them. I read every single comment, and your insights help shape the content we produce for this community. This is how we build generational wealth, not by chasing hype, not by gambling on penny stocks, but by following the money, understanding the fundamentals, and positioning ourselves ahead of the crowd. I will see you in the next one.